Hi, Hank, SixFourTrading. Forgive me, I'm a little under the weather, but I have to get this out. Today we got the CPI data. Came out way less than expected, which would one would think the market would rally up and run off of that. But typically the market doesn't really react the first day, the day of the news that comes out. It's really like the next day or next couple of days you might see a reaction. But it was not exciting today on the market after the news came out. So people are questioning like what's going on. One thing is we still got tariffs out there. The data inside of there still was not looking too good for a couple of things that have gone up from inflation, but overall it went down significantly. But the tariffs are a concern. The tariffs are a concern because it's lagging. The effects of it could show up, and we still have data coming out. What the Fed decision might be to either pause or cut rates. The consensus is that they will just hold where they are until the next time. So one thing I wanted to show on here. This is in the NQ. This is active live trading as of 1 o'clock a.m. Excuse me again. And so I'll talk about gaps, and I'll talk about those a lot. I'll talk about moving averages. And what we have here is a fair value gap. A fair value gap is the displacement through an area like this candlestick here, and the bottom of the next candlestick, and the top of the previous, and then the top of the previous candlestick is where you draw the fair value gap. So everyone's talking about how this is going to just bounce and go up. We got good data, and you see the market didn't even react really to it today. We still got a fair value gap to fill below. And a lot of people aren't seeing this information, and they're going to get tricked, possibly, that things are going to bounce and run back up. One initial thing is, excuse me, these wicks you have here in this range are an issue of rejection of the zone. So if you go to a lower time frame on the NQs, let's go to like have this trend line here. This is active. It's broken below this trend line. It looks like we're coming back down to the top of this gap area where we came in today, fair value gap, and we might just go down and go all the way through this fair value gap. Now, I think if we do go through this fair value gap, I do think we'll get a bounce there, but it's like a magnet. It needs to or wants to possibly fill that. It doesn't have to. It could just run up, but that fair value gap is right there. You can see that the go to a daily chart. You can see that the price action came right down into the top of that fair value gap, but it never filled it. So it needs to most likely fill this fair value gap since it's right there. Maybe come down and do that, and then we go back up higher, or you could go lower. I do have a price target of 18 300s, 331s on the NQs to the downside. You know, we've been selling off pretty strong. The other thing is that we still have this doesn't really mean a lot on here, but the 50 on here, if I go to the SPY, triple Qs and stuff, we can take a look at that. The SPY has come down. It's still in that major support area we've been talking about for a while now. We've been watching this area, or I've been watching this area and been talking about this on previous videos of how we've been coming down into this major support area. And it's defending this area. It has not confirmed a break and close outside of that area. If we do, we're coming down to 540s again. 540s is still a target to the downside. We are underneath the 200 SMA, and we got the 50 almost about to cross the 100-day moving average. So I still think we have more downside. I think this may be just a dead cat bounce a little bit. We could run up more, but we'll see. We'll see what happens tomorrow, how the price action is. But one important thing we have coming out as well is we have potential government shutdown that could happen, and that would damage any hopes of this going up, you know, in the near term. If that happens on Friday at 12 p.m., which is, you know, pretty much Saturday morning, and the government shuts down, and then if it does shut down, it's like, how long is it going to shut down? The longer it's down, the worse this is going to be, because you have impacts to that are, it's just damage you just can't really undo. So, well, if that happens on top of tariffs, you know, it's not going to be a pretty sight. We do have, I believe, on the 19th, we have the Fed is going to meet to talk about rate, the inflation rate decision. So we'll hear about that. But, you know, all in all, I mean, there's other equities out here that just kind of just been in a holding pattern all day. Pretty much nothing. Tesla looks pretty good, but it's still rejecting this 250s area. It did come down and fill this gap to a T that I called out. There was a gap here. I've been talking about this gap being filled up here, and I said possibly pull down and fill this gap here. It did exactly that. So we did talk about that and discuss that trade. We did very well on this trade. But the 50 is really curving down pretty fast here to get to that 100. And so we may be watching out for more downside on Tesla. Now, if Tesla does have more downside, there is a, we'll just go here, right? Trend line there. I do have downside targets. I'm moving to 217. I'm going to say probably take that out, 200s, and then maybe go down to 190s or even lower. There's a lot of negative sentiment around Tesla because of Elon Musk. There's also negative sentiment because he's not, the investors are saying he's not paying attention to Tesla. He's paying attention to other things, which he is. He's admitted that. And that's hurting the company's equity and hurting the stock price. And investors aren't happy. So this right here, this little doji where it closed at, if we can break above the 256, we can go higher, probably go back up and test the top of this gap, which the 200 SMA is really about. Or because this is indecision doji, that's what it represents, this could pull down and take out the bottom of this gap and go lower. So we'll see what happens on Tesla. I have a hedge play on this right now, up or down. I'm expecting a big move on this next couple of weeks. So we'll see what happens on that. Apple today really sold off hard. Again, there's a little bit of a head and shoulders here. If you don't see it, I'll draw it out. There is a head and shoulders here. Right here. Probably pull this down a little bit lower. Boom, head and shoulders. All right, so there's a head and shoulders pattern. It's broken out of that head and shoulders. This neckline has been taken out from 218.66. And we came down near the 213s, which I've called that. That's been price action. I've been looking on that. And look at what we have here. We have 50 about to cross below the 100. That's not going to be a good sign. This breaks below. This can see a lot more downside on Apple. I think, personally, Apple's a little bit frothy. And there's one thing I've mentioned here. There is a gap that has not been filled. Again, all gaps must be filled, or that's the rule of gaps at some point. So if this breaks through here and just it's pretty much completed the left right shoulder of the head and shoulders, and we break this line of 213, we have a lot of downside. Next real key level support will be on 196. I will be looking at that as a target for Apple, and ultimately down to 173 on Apple is to fill that gap. So it's on its way. So we'll keep an eye on that. NVIDIA, still inside of this channel. We bounced up to like near the bottom of the channel. We bounced up a bit here. Maybe go back up and test the top of that channel trend line. You do not want to break out of this trend line here on NVIDIA. Again, of note to mention here is that the 50 is well below the 100-day moving average and getting close to the 200-day moving average. And again, if it doesn't get to the 200-day moving average, the 50 cross below, that is a death cross. That is not good. That is very bearish. That is a get out, a dodge, sell it, get out. It's going back down further, and it's trying to save that. But we're back in the support zone that we've had marked here for a while. We've been talking about in other videos we're there. We break above it. We can probably go try to test that, maybe slow down or stop this 50-day crossing that 200-day moving average, that forming that full death cross there. But again, I'll be looking for support around 112 tomorrow, maybe 107s if that breaks down. You're watching this trend line here, and you're watching this key level of 100. I still have a target on 100 for this. If this can't sustain this, and if it definitely does a death cross, it may come down and take that out. So that's NVIDIA. Google is looking pretty much the same today. Doing a lot of the tech sector right now. It's been a hot item because of growth stocks, and people are just taking a lot of money out of growth stocks. It did fill this gap that it had here, right? The gap area already broke below that gap. 50's curving down hard. We're bouncing out of this zone I had here in 160s. Excuse me. But we probably can see more upside on Google. We'll see what happens tomorrow and the rest of the week. But this is a key support area as well, right? This is an area of support. And we want to watch support zone. We want to watch for a break outside of this area, below or above. So if it breaks above, we could probably go back and test. I'll take this out because I already filled the gap. 200-day moving average. But if it does break below, then the target downside on Google would be this 147, 150s area. That's the most decent support, stronger support here. But there's another gap down here I just saw. That's not good. That probably needs to be filled at some point. So if this does break below this zone, I mean bottom of this candlestick here, start headed towards here, it's high probability this goes down to 142s, 140s to fill that gap below. Gaps are just coming back and being filled. Growth is not a hot commodity right now. You may get a short-term rally off of the CPI data. We'll see how that looks. But what's holding that up, I believe, and why we didn't get anything today, is the fact that we had tariff. We still got tariffs, and we still have a looming government shutdown Friday at midnight. So I will be watching out for all of those things. Triple Qs I didn't do yet, so let's take a look at triple Qs. Yeah, same deal here. Still under everything. Again, everything under 200 SMA is bearish. Period. It's a nice strong trend, straight, pretty much trend down. This may turn into consolidation. So this is with all the other equities that are defending this zone. Like so, from here 470s up to 483s. This may just chop around sideways until it's, market may be waiting for other data, maybe waiting to see what happens on Friday, maybe waiting to see what the Fed says. This may just chop around this range until then, and then make a decision either go up or go down. So I'll be watching out for that. We may just be in store for a lot of chop for the rest of the week. If there is no decision by maybe like later in the afternoon on Friday, you might still see a sharp sell-off in anticipation of that shutdown. And then if it does shut down and there's no resolution over the weekend, you'll see more strong selling on Monday, Tuesday. We have a debt ceiling situation as well. So there's a lot going on outside of CPI. And then there's the CPI that was a hot print. Now you got a not hot print. So it might just be a mixed bag. But the determining factor of everything right now is, like I said, is the tariff shutdown and the Fed's rate decision. So I'm Hank, SixFourTrading. Thank you for joining. I will talk to you guys next time. Take care. Bye.